Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Now let's take a look at the gold market. Well, within the last 2-3 months we already we speak every time about the exceptional rally probably of the gold market in the nearest time, since the global situation is changing, the fundamental situation is changing around the world. So right now it is obvious, and only the blind person can't see the real run into quality, since the risk of some unexpected events has risen significantly, and that's why we think that in the medium-term perspective, with a half on a year or a longer time, the gold market and other safe haven assets will take the exceptional role in the financial markets. In the currency market, this is Japanese yen and the Swiss franc, and the commodities, this will be the precious metals, mostly the gold market. We already see the big shifts and leverage impact on the market, the events that are now taking place in the world. So currently the action that we see on the Japanese yen on the gold market is a bit overextended compared to normal behavior that is based on the technical issues, on the market mechanics, on the normal market's rules. So how market should behave when it stands on its own, so when it doesn't stand under the impact of the fundamental geopolitical tensions. And right now we see that this behavior is not quite so as it should be. So yesterday, for example, we know that this was the speech on the Ms. Yellen on the perspective of the rate tightening, on the assessment of the situation in the United States economy, and mostly these comments were, let's call it, slightly dovish. As a result, you can see that gold market has continued moved higher, although previous 3 sessions stands flat and has started the preparation for the minor retracement. And the Japanese yen also has dropped really significantly, and it stands deeply oversold right now on the weekly chart. This is not typical for the financial markets. Financial markets do not like to stand on overbought and oversold for a considerable period of time. They try to abandon this situation as soon as possible. It just proves what real driving factor stands at the back of the Japanese yen, and they are not simple market factors. This is something greater. The same we have here, but the commodities is less sensitive to the overbought and oversold. For example, gold market could stand above the overbought for a long term, and it's even move beyond the overbought considerable period of time. So commodities is not as strict follow the overbought oversold as the financial markets. So anyway, this rally that we see right now is not just a continuation of the bullish trend, because technical analysis and the market mechanics suggests retracement. Here, major targets has been hit. Market stands at a very strong resistance, but market has continued to move higher. What does it mean for us? It means that trading will become more complex, and we will not able to apply every time the normal technical rules that we usually follow. They could be skewed, and this distortion of these tools probably will be to the upside, because we see right now extreme demand on the gold by the well-known reasons, and hardly this demand will fade very soon. That's why many retracements that we will expect probably have the chance to not happen, or something of that sort. So That's why on the daily chart, guys, on the long-term chart, the situation hasn't changed significantly. So market move above the yearly pivot point. It has created the reversal swing to the upside. It means the previous bear trend has been broken. Market has moved above the weekly pivot resistance one and above monthly pivot resistance one. It's been above yearly pivot point, and it tells that this is not retracement within the bear trend. This is the starting point of some medium-term bullish trend. How long this trend will be is currently difficult to say, but it's definitely the reversal on the gold market. After reversal, some deep retracement should follow. And this is what we have since yesterday. So this analysis stands the same. For taking the long-term position, we anyway would need some dip to buy. We will not right now. We will not be hurry and trying to jump in a running train. So this is not our way to trade. We will waiting for retracements. Retracement sooner or later will happen. That's why the overall analysis here stands the same. Here I just would like to talk with you on this rally to the upside. This rally is triggered not by the technical continuation. This is fundamental and geopolitical result of the extreme demand, of the overextended demand on the gold. That push market beyond every understandable and clear limits of the overbought on the weekly and the daily chart. Global reversal swing on the monthly chart, I just remind you, we talk about it every time on the monthly chart analysis, stands at 1280. It's not really far from the current levels. So if market will move above the 1280, this will be final confirmation of the global reversal on the gold market. So as you can see, market right now is entering in this very interesting stage of its life, and it's very important for us. And we think that the safe haven assets right now will become our major trading assets that has really big potential for trading. So it will be very bright action, I suppose. So in the short-term perspective, guys, I just would like to share with this some tool. It's not really easy to apply it, but when the market just moves very fast with minor retracements inside of the days, with no significant bounce and is creeping with overbought, some a trading tool that Judd Napoli explains exists, and this tool is based on the level of the overbought on the daily chart. So if you're trading on intraday charts and you would like to take the scalp long position, you could follow some minor patterns and keep in mind previous top. So for example, the market is forming the top here, and you know the daily overbought, so that's will be a profit profit level where we will take in the profit. And within the trading session, as soon as market shows minor retracement, you could try to take the scalp long position with that trading the profit right at daily overbought and the previous top. So for example, market has created the top, now it shows retracement down. The idea of trading suggests the taking scalp long position with the exit right at the previous top and the daily overbought. So right now, as you can see, market has formed initially this ABCD, turned to ABCD retracement down. Now it stands with this ABCD pattern to the upside, this 1217 area. So was the top on the last session. So somewhere currently the situation already, we have missed it, and market retracement already has completed. Right now it's tending higher. So if market will create the new top today, will be minor retracement. You could follow with this creeping of this overbought condition to the upside, and just keep in mind the top that will be formed today. So it's a risky approach for trading, but sometimes it could become the only way how you could trade when the market doesn't show any meaningful retracement for a long period due to some geopolitical situation. That's really good possible. That's why in this case all that you could do just trying to catch the minor retracements on the intraday charts, on the hourly chart, for example, taking the position and out then by the end of the day at the top of the day or at the daily overbought. This is the trading style that Judd Napoli also talked about it when the frosty market is developing. It's the only way how to trade it. So that's why currently, guys, all that I could say is that you could follow either this technique trading. So for example, right now you can see market is creating the new top. As soon as the top will be created, it will turn to retracement. This retracement will be the chance to take the long with the exit again at the top that will be created here. Stops that have been placed above the 12-even area has been triggered, and that's why this lets market to show this upward continuation. But on the daily chart, guys, for a longer term entry, all that we could do is just wait or retracement down. Maybe this will be the bread and butter buy, by the way. Just now we consider thrust has reached the necessary amount of the thrusting candles, and we could watch for a possible retracement down. When it will happen, it's very difficult to say because situation changing is very fast. So let's keep watching.